Good morning, ladies and gentlemen. Thank you all once again for tuning in to another live stream here, where basically all we do is talk about a few stocks here in the morning and answer a few questions. So thanks again for tuning in. There's really, to be completely honest, I'm really not too excited about much moving this morning. So really kind of plan to sit back in the morning time, let things work their way out and see how things develop throughout the day. But there's really nothing that I looked at today that really had me all on the edge of my seat. So, just an FYI. Still following Intel a little bit. Yep. Sell everything. What's going on, Owen? Happy to have you. Happy to have you. So, first one I'll talk about is Tesla. So in fact, Tesla sold off, right? We've seen it break through its support. But today I'm actually going to be long bias on it a little bit. Just to see, because yesterday it put in a really nice bounce, which in theory creates a small high or low from day to day. And really want to see if we kind of continue to squeeze back up towards its initial sell-off right here, this big rolling over sell-off day, which puts it at about 246. So really would like to see if we can actually see Tesla up a little bit on today, at least to start. So really just following it, seeing how it develops throughout the day. But I think with it putting in its higher low day, dropping out, hitting a lot of people's stop losses below 250s, there's a lot of buying back going on in Tesla here. So I want to see if we can continue this squeeze back up, maybe even towards 246 on the day. And really that's just it. I mean, if you want, you can mark off your pre-market highs and yesterday's highs. It's always a good idea to have those levels on there. Closing prices for yesterday, aftermarket supports. I mean, you can put all those levels in, see how they react there. But for the most part, kind of like the way Tesla performed yesterday, and just want to see if it kind of has some continuation to the upside today. So definitely one of the stocks that I'll be focusing on throughout the day. Again, remember I have like 4 screens. One chart has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 charts on my far left screen. Then I have another 2 charts on this screen, another 2 charts on this screen, and another 2 charts on this screen. So I got a lot of charts that I can look at throughout the day. So when I say I'm looking at this stock, it's probably going to be on one of my screens for the day, which means I'm also looking at another 20 or 25 stocks throughout the day. So usually there's something that'll happen, and I'll keep an eye on it. Google's down. I never really took a look at Pfizer today. Another one I'll talk about is CGNX. So CGNX had an earnings report, sold off pretty good, just kind of fading in the downwards direction. So this is interesting because it's starting to come into a pretty significant level of support, which is 45 to 44. Go back a little bit. This is the level I'm talking about right here. These gaps. 1 gap and 2 gaps. So we've kind of entered into this gap zone support, and so it's really looking to see if it ends up holding right around this 44, 45 level, and we in fact get a little bit of a squeeze back up on the day. So that's actually what I'm watching here on CGNX initially, is for a bounce back up out of the gates. If it doesn't happen, it doesn't happen, but we've already decreased pretty good from 54 area all the way down to 44. It's a 10-point drop on a stock that's worth $50. I mean, that's a big decrease in value. So definitely going to keep an eye on it for a long play. I'm just not crazy about the short play. I just think it's decreased so much. We're not going to get too much more to the downside on this play. So really more or less just kind of long bias on it today and in the coming days too. And those are really the only 2 stocks I was really liking, if anything. Everyone sell Tesla right now. It's funny. Yeah, we can talk about RENN. It's really not it. I'm using Thinkorswim. Yeah, Google had a really big sell-off. We can talk about that because that's something I know a lot of people are looking at maybe. Yeah, Google dropped 100 points. I would say watch Google short bias. I mean, this is a perfect gap down consolidation and then look for a run to the downside out of the gates. I'm not going to play it personally. I don't really care to trade Google. But it does have some room to come down, because there's really no technical side here. There's no real support to the technical side. What are we at? We're at 1 something. We're at 188. Yeah, there's really nothing there holding it up. I mean, it has a small little dip here, but I'd be more likely to see it hold down here at about 160. So I would say probably watch the downside on Google today. I will look at RENN because I know a lot of people probably looking at this one. So I'm not crazy about RENN. Again, it's a penny stock that doesn't have the characteristics to be a really good penny stock. And more often than not, RENN's pretty disappointing. Typically never has any crazy big days. And the spikes that it does have are usually given back extremely fast. And it takes a long time for it to spike. It's usually not a fast mover. And the chart really just isn't developed in a manner that should cause it to boom. So it's really just not a great setup. The characteristics for a good penny stock aren't there. The only thing it really has going for it is that it has like a 45 or like a 46% short float. So it does have a decent short float, but other than that, that's really about it. It has a high float, outstanding shares, and there's really nothing too great about the stock personally that would make me want to trade it. The setup isn't there. Personally, I probably would. I mean, you can keep an eye on it because every once in a while, I mean, I'm wrong and things do happen out of the ordinary. But the stock doesn't really have any news. There's really nothing that it's just a no, probably not today. Not on RENN. Going to we'll take a look at what about Apple. Apple has earnings today, so probably not going to do a whole lot. You should probably just wait till after earnings. That's what's going on. Earnings days, usually stocks that have earnings reports coming out today or tomorrow, whatever day it is they're having the earnings reports, they typically don't trade very crazy before earnings. Every once in a while they do, but typically they have a pretty relaxed day of trading before. So GE spiked up this morning, probably more or less a short play on GE than anything. Most of the time, anytime GE has an earnings, at least recently, and it spikes, it usually comes down. Like this one here, earnings report spiked, sold off same day, gap up here, sold off same day, kind of pushing up here. Probably going to see a little bit of a sell-off on GE. First, I would initially watch it for a bounce up, and then I'd probably be short bias on GE. Just because I still don't think that the sentiment has dramatically changed on GE. Let's see. I mean, this does set it up for a little bit of a higher low in a longer term chart, but yeah, I'd probably be short bias on GE today. But the one thing you need to pay attention to is how well it holds this pre-market high. That's what you're watching for. This spike up here to pre-market high, sideways consolidation. You want it to hold at pre-market high level, or if it does in fact sell off below that, then you're really watching it in this dip zone right here from 1027 to 1017. Oh yeah, not to mention it's all the way back up to $11, which is a sell zone on GE. Meh, I don't think many. Yeah, Josh, I mean, it takes a long time to learn, keep studying. Really good thing you can do is use on-demand trading from Thinkorswim. Granted, it's not going to be real money. There's no learning. There's no experience like the experience you gain from trading real money. But best advice I can give you is not to try and make a bunch of money because you're not going to make a bunch of money, especially right off the get-go. Most traders will fail due to the idea that they try to make a lot of money, or they see somebody making a lot of money and then they try to make a lot of money, which then involves you taking on too much risk, or you over leverage yourself in positions, which then can easily turn your emotions, or not turn your emotions, but it can easily trigger emotions to outweigh logical thinking. So best advice, don't go crazy on your share size. Don't try to over leverage yourself. Don't try to make a killing. Always know why you're trading and what purpose you're doing it for. Are you day trading, right? When you take a position, is it to take a position for a scalp trade? And if it is, then you take it off once your target's been met for the scalp trade. If you're going for a long day swing, then you do a long day swing. You don't try and hold it overnight. If you're under the pattern day trading rule, do not enter a position that was a day trade and then say, well, I can't sell because I'm going to be locked out for 90 days, and then try to hold it overnight. Never put yourself in that position. I mean, I can give you tips all day, but most importantly is don't try to make a bunch of money, and you'll probably do just fine. No, we kind of went over Apple. As I was saying, Apple probably wouldn't do much with it today since earnings comes out tomorrow. Really just kind of sit on it. Michael, I would wait on. I mean, like if I were to buy Google, I wouldn't be buying it today, most likely. NBRV, yeah, I'll take a look. I can't even honestly remember the last time I seen this stock. Slow mover. It's a swing trading stock, not more or less not a day trading stock. Let me get another view of this. Just trying to get a good feel for this pennant. It's hard to say because there's no true. It's pretty even base from dips to highs. I would watch it. You got a couple more days, I think. I think you got 1 or 2 more days before you get a true move. But the problem is it's just they're both 50-50. I mean, it's a spike down, spike up, spike down. That's the only curl. So right now, in theory, you have to be more bullish than bearish based on this last one right here because this is a curl formation. So I'd be a little bit more bullish for right now. How's it been over the past 3 years? Yeah, probably a little bit more bullish for right now. Zynga, I wouldn't even probably trade that. Connor, for one, myself, I probably wouldn't trade GE. It's not how I would trade it, it's how is it traded, right? So everyone goes, how would you trade this? And that's just something I get a lot of times. How would you trade this? It's not how would I trade it, it's what's the market telling me to do, right? So you can make 1,000 game plans for a stock and it still be wrong, right? So it's like when I go into trading, it's not I'm making I have an idea as far as what all these outcomes and what all these possibilities could be, and I run through the scenarios in my head, and I go, okay, I have a game plan, right? And the game plan is to listen to what the market's telling you and then go based off the market, right? You could be like, oh, well, I'm going to short it at the pre-market high. Next thing you know, it never goes to the pre-market high. So is it that you don't know what you're doing when it comes to trading, or is it the market just didn't want to do what you wanted it to do, right? So it's never make a plan based on what you want to do. It's make a plan based on what the market's telling you, right? And so for me on GE, right, this is a situation where if you're planning on shorting at pre-market high, you have to understand there's a lot of work GE has to do, right? It's already kind of fading. So it's like, yeah, that's a pretty good short spot, but is it even going to get back there? Maybe, maybe not, right? If it's first going to drop out here, like it changes. If you're day trading, it changes the direction of stocks and trades so fast that your game plan has to change with it, right? It's like a wrench getting thrown in your day. So for example, at this point, you could still have a game plan to short pre-market high because it's holding this previous pre-market high. So it could spike, the gates get close, and you get short there. Well, if it doesn't hold here, breaks down to here, right? Then there's a bounce play. You can look for a bounce off this low for a scalp up. And then once it gets back up to here, you can look to short it when you're getting into an inverse or when you're doing a head and shoulders pattern, right? So you could go from short play off a pre-market to no short play off pre-market highs to bounce off the pre-market dip to a short play off this pre-market high. I mean, you see how fast that can all change? So it's not how I'm going to trade. It's you got to listen to what the market's telling you in the moment, right? And when it comes to day trading, things are going to change like that. So for me, I probably won't even trade GE personally. I'm just not a big fan of it. But you have to be understanding of how markets work, all the formations, and so that it's just not a simple question how you would go about trading it, you know, from because you can't get that detailed, right? You just can't get that detailed. You have no idea if some hedge fund's going to close out 10 million shares a day on GE and slide the stock down, or if some pension fund's going to buy up 20 million shares of GE today and start grinding the stock up. You have no idea if that's going to happen. So that's a problem. You could read Trading in the Zone by Mark Douglas is a good book. That's one of my favorite. You should read The Intelligent Investor by Benjamin Graham. That's a good book. How to Day Trade by Andrew Aziz is a pretty good book. Yeah, I would start there. But Benjamin Graham, Intelligent Investor, is more about investing, not trading. Oh, yeah, no, I've been saying this for the past year already. I mean, like, Mr. MB, to answer your question, I've been saying this for the past year about the market, right? Well, maybe probably more like a year and a half, maybe two, close to now. But yeah, I mean, I have cash. I've been storing away cash and getting ready to invest. I mean, it's a smart move. So yeah, I would say holding on to cash and waiting to invest is a great idea. And here's a problem, right? And here's something I've heard too. A lot of people are like, oh, you're just missing out on gains. Like, because I always make videos and I say, hey guys, I'm really not buying much up. Like, I still invest a little bit here and there, but not a lot. And everyone's like, oh, you're missing out on so much gains. Look at the market bounce from December. It's like, yeah, guess what? I got all the bounce. I've been invested since I was 18 years old. Any move in the market, I get every piece of it. So it's like I'm not missing out on anything, right? So I don't know where the idea, maybe people just think that I solely trade and have no other dollars to my name in the market. That might be it. But, I always hear people go, oh, because I'm bearish the market. Right now I'm bearish the market or want to be bearish the market. Everyone's like, you're an idiot because you're missing out on all these gains. I'm like, no, I'm really not. Every single dollar that's been lost or gained, I've gotten every piece of. I just want a bigger piece of that pie when the time is correct, right? And I can do that by staying more in, well, not staying more in, but having cash on hand ready to invest. So again, the foot is barely on the gas pedal for investing right now, okay? It's just barely on the gas pedal. Basically just coasting in neutral right now. Basically all I'm doing. Just coasting in neutral, whatever the market wants to do. If it wants to go up more, great, I make more money. If it wants to go down, perfect. This is what I want it to do. I want it to do that in sense of things getting cheaper, but I don't want it to happen because if things do go bad, then we go into an economic recession, which could lead towards, another depression if we ever get that bad, which it's very well possible. Don't think it's not, just because it's the United States here, at least for me and many of you guys. Just because it's the United States, don't think that things can't get super ugly. Again, we are human. We are equally as dumb as the humans prior to us, maybe a little bit smarter in terms of science and things like that. But in terms of economics, and humans can make the same mistake over and over and over, right? We are built the exact same here as any other country, and any other country is built the exact same as we are here, and we could all make the same exact mistakes, if not worse. So again, living in the United States has been this narrative that we're bulletproof, and a lot of times that we're so much better than everybody else, but in reality, we're really not. Really not. We're the same people, though things may be more advanced and we might have more than others, whatever that argument you want to make it. At the end of the day, we are human and we're no different than anybody else. And all the same mistakes that have been made anywhere else can equally or as well happen right at home. And I wouldn't put it over the country to lead into that same path, right? Great Depression, right? Very well possible. Well, people are going, well, how are you going to do that? I don't know. Let the bubble pop and we'll find out. Okay, so just know that I wouldn't put it over your head to think that we can't have extremely bad times. That's why I'm always going to try my best to be prepared for the worst outcome, right? When things seem really, really good, there's usually a storm right around the corner, right? Same thing happens in life. Like when your life seems to be going so perfect, the next week you get punched in the face, you get kicked in the nuts, and then your car crashes, and then your electricity gets shut off, and then your heating goes down, and then you lose your job, and then your girlfriend breaks up with you, and your life just gets put into the deepest hole after things seem to be going really smooth, okay? So, to answer your question, yeah, I have some cash, and I'm waiting for the market to provide better prices. Really am. And I think it's a smart decision for anybody to do so. But on the same note, if you're not someone who invests like crazy, or you're not up to date on the market, or you can't sit and watch it like I can, then it's always a good idea to do dollar cost averaging. But if you're aware that the market's a little bit high and you're already invested, then like you've already done your part. I mean, like waiting another year, investing a little bit, maybe decreasing the amount you invest, right? If you typically invest $200 a month, maybe taking it down to $50 a month, and you can start surplusing $150 in cash a month to put away when things get worse, but you have to do your best not to spend that money. So I think it's a good idea to hold some cash, right? So again, yeah, I mean, not to go deep on you guys there, I just always want to keep it fresh, engaging. Things are new. Give my outlook on it. I hope I didn't offend anyone by what I said. That's just my view. Is that there is no difference between me to any one of you, from this country to that country, whether more developed, less developed. At the end of the day, we all have the same body parts. We all have the same brain. I mean, it's all the same. And so, how all this judge and hate came into the world, I don't really know. And I don't really want to be a part of it. And I've never really wanted to be a part of it, especially as I grew up more. But I consider myself as equal to anybody else in this world, personally. So, again, when you think about economics and the way the world works, it would not surprise me if we had a Great Depression, or if in 20 years we had a Great Depression, right? When things don't happen for a long time, you build up this security wall that it can never happen again. But it's like, what do you mean? How can it never happen again if it's already happened, right? The only way it can happen is if we learn from those mistakes. Yet we already know we have it in terms of stock market and economic conditions, because we are back into the same situations as '08. Right? And if you guys don't think we're in the same situations as '08, then I don't know where you've been, or I don't know what news you're listening to or who you're listening to, but whatever they're telling you, it's false. It's fake, okay? Anyways, enough of the doom and gloom and put the conspiracy tinfoil hats on this morning. I got to get back to the private group. Anyways, I know we didn't have a time to go over a ton of stuff, but I will be back on tomorrow. So thank you guys once again for tuning in as always, and I will see you guys tomorrow morning.